Hello, everyone. Welcome to a special live edition of Stock Market Weekly. Hopefully, volume is good. My screen is good. Trying a new format today. A little bit pressed for time, so I'm actually doing an interview a little bit later today with Ali from IBD, and I wanted to still be able to get out a little video before I get tied up in that. So we're going to run through our usual live, our usual Stock Market Weekly video. We're just going to do it live. And so if you're brand new to this video series, then we break up our analysis usually into two parts. And today we're going to focus mostly on just price action. We're going to look at some charts here, and we're going to just highlight sort of what went on this week, what to make sense of the big moves that we saw, and then just sort of plan going into year end, basically. If we got some time here, I didn't advertise that we're doing a live video, but if folks are here, if you got questions, comments, leave them. Happy to get to them towards the end of this video. So markets at the time of recording this, they're still going, right? We're still chugging along. It's OPEX. We got 15 minutes left, but here are sort of the big takeaways from this week for me. We had, of course, the CPI. We had a sort of trifecta of catalysts here for markets. We had the CPI data come out. Markets had this big pop off of it. We had the Fed the next day sort of giving their outlook looking ahead. And then, of course, what their December rate hike decision was. And then we have OPEX on Friday, which is what we're about to experience right now. It should be some big volume, lots of contracts. I think it's one of the biggest OPEX that we've seen in history, frankly. And so with all of that, basically coming into this week, we finally got a range breakout in equity markets. So we've been talking about the sideways range, the chop, the going nowhere, the frustration, and we finally got a move outside of that range, and it was to the downside. Now, sentiment is very bearish once again. Technically, we're breaking down, we're rolling over. Macro folks still bearish on this market. Technical folks now very bearish on this market as well. And traditionally, this is a very seasonally bullish time for stocks. So we'll see if that has any inkling of hope here into the end of the year. But usually the second half of December is historically a pretty good year for, is a pretty good time period for equity markets into early January. But, you know, we know 2022 is unlike most years. So we'll see if that actually matters. And the two questions I'm sort of asking myself right now this week is the dollar waking back up? Okay, are we actually getting a bottom put in here in the dollar? And is it going to start rallying to the upside? Because that to me, it'd be meaningful. And could this be a bear trap? Could this be a very ugly, nasty kind of false breakdown to the downside that ends up springboarding us higher, right? So those are just two open-ended questions, and we're going to talk about some of the levels right now. So let's jump in here to the daily chart of the S&P 500. And I'm using TradingView today, so I'm kind of changing everything up. So I'm not on my traditional TC 2000, which has all of our levels that we've been looking at. But basically, you know, in the S&P 500 is the cash settled daily market now. This is the range that we were in for such a long period of time, 4 weeks, but it feels like an eternity. And so with the action that we saw this week was basically the big upside gap and the failure to break out here on that initial CPI data. We got some mild follow through selling on Fed Day. And then we had, of course, Thursday being the breakdown session here for markets as we came kind of slamming down and finding follow through effectively from the Fed on Wednesday. And now, of course, when we look at where we are now, you can see we were much lower in the day. We got down to about 38.20 or 38.30 in the S&P 500 cash, and we basically filled the gap back here from that November the 11th open gap that had been in place for quite some time. And you can see we're starting to lift a little bit, finding some bids down here. So the way I've been sort of framing out this market basically was 3,900 as the line in the sand. And if we are above it, we can stay optimistic in the market. If we're below it, then all bets are off, right? We have to be careful if we're below 3,900. And again, it's not a made up level. It's a level that the market has showed clear inflection points around, right? Going all the way back, you can trace this kind of big inflection area around 3,900, lots of pent up buying and selling psychology around that area. So basically, we find ourselves now with a confirmed sort of breakdown below 3,900. That is very much a technical sort of risk off signal in my eyes. We have now just a clear violation of this range to the downside. And of course, when we look at the bigger, broader trends here, you can see we're still in a series of lower highs and lower lows in the broad market. And so this could be, the spillover for another leg lower. Now, again, I did pose at the beginning of this, at this video, is that I'm going to keep an open mind here, and I'm absolutely going to want to tighten up risk if I'm a discretionary trader here. Sorry, my drawing tools are getting used to, but I am going to keep an open mind that what if this just becomes some type of epic false breakdown here that doesn't get any legs to it. It sucks everyone back in to get the next big scary rollover in this bear market. This is going to be the big leg that really, catalyzes everything lower, right? We get everybody on the short side once again, but there's no juice to kind of push us down, and the market pushes right back up. And in that scenario, I'm going to keep an open mind. I'm not saying that's the likely scenario, but I'm sure as heck going to be watching this 3,900 zone pretty closely here. So basically, if we do find some type of higher low that gets put in, and if we do start pushing back over 3,920 or so, and we start reclaiming this range, then I'm absolutely going to be paying very good attention to that and looking at that as a potential opportunity to maybe get some type of squeeze move here back to the upside. But until and if that happens, the support is broken, trend is weakening here, and we do need to be pretty careful on our risk. Now, if we go to the Nasdaq 100, basically same rules apply here. We have this nice tight orderly range for the past month. We've been talking about it for a while, 11.4, 11.5, depending on how you want to measure it. We broke down, we came down and filled not all of this gap, but most of this gap here. And you can see the market is just staying pretty weak and heavy, at the time here, 10 minutes left until the market closes. So really nothing special here. It's kind of a similar setup. If we start getting back over 11.5, that's meaningful, that's notable. Nasdaq has certainly been the underperformer recently compared to some of those other indices, the US indices. Now, this is where I think things get interesting here. So this is the dollar. This is the dollar index. And so this is what I'm waiting for more clarity. Right now, we got equity markets that reacted significantly negative, right? We broke support. We're breaking down here, technically kind of a nightmare. But the dollar hasn't quite reacted yet. And this is kind of interesting to me. I would have expected to see the dollar making a more meaningful kind of flight to safety move, but it's not quite breaking this series of lower highs, lower lows, and overall downtrend that it's been in over the past month. And so this to me is, I think, what's going to be most important here. If the dollar can actually break out, if it can find follow through, and if it can start lifting back to the upside, then it makes all the sense in the world. Equities probably coming back down. This move, maybe equities got in front of it instead of the dollar. But I do want to see dollar strength to get, more bearish on the market. And if the dollar can't find any strength, then I don't know how much, I'd be curious to see how much selling pressure we actually get here, because there's been such a tight inverse correlation, and we know how those parallels are drawing this year. So I'm keeping a close mind on the dollar basically not confirming the equity market weakness. That's kind of how I'm reading this. Weekly chart does have a reversal, right? So there's not that there's no movement here, but the dollar is still negative on the week. So the dollar index, right? So there was no real flush rotation into this. It definitely pulled off of the lows, but it didn't get any meaningful kind of follow through and move back up. So I'm going to be watching this very closely here. And that's what's giving me that open mind about, potentially being, a potential false breakdown in equity markets, right? VIX. So VIX is popping a little bit here back into the 20s, but again, it's still down on the week. Kind of makes sense. I mean, we have obviously OPEX now, so we'll see what VIX looks like tomorrow or Monday, I should say. And we had some big events that are finally out of the way. So the market can now maybe breathe a little bit of a sigh of relief. But still, we're not seeing a VIX that is quite bid back into the mid 20s or upper 20s like we have for most of this year. So again, a little bit of subdued reaction here. Nasdaq VIX or Nasdaq volatility is certainly higher, mid 20s, but it typically runs, a bit higher, a little more rich premium there. 10-year yield. So this is the other thing I'm paying attention to. Kind of goes hand in hand with the dollar, but you can see the 10-year yield is kind of basing out here, going sideways around this 3.5% level. I do think there's, obviously reasons to be watching this as well. This is kind of tied to that dollar trade though, for the most part. So, let's again, just keep a close eye on this. If the dollar starts moving up, it's probably likely yields are going to continue to, start pushing up as well. But we'll see how that plays out. Again, it's sort of a secondary kind of market I'm watching. And in terms of, just general market leadership here, or strength, or sector performance, I got to call out two sectors today. Is biotech is one. So take a look at IBB. This is a sector of the market that is not broken down. So if you take a look at this consolidation, it's still very much intact. We tested the bottom end of it today. We bounced above it, and we're trading down about 80 basis points right now, 5 minutes left to the close. Look at XBI, which is, another flavor, let's call it, of the biotech market sector. It's up this day. It's up 0.5% going into the close here. So there's some strength out there in biotech in different sectors. Semiconductors also kind of right on the edge here. And I consider semiconductors a very leader type of group, especially in this type of environment. Just historically, semiconductors have been a very risk-on gauge and kind of market leadership sector. And you can see that they haven't quite broken down yet either. There's some relative strength here in the SMH semiconductor ETF. You can see it's kind of testing the bottom end of this range, 213, and it's kind of figuring out what it wants to do here. So this is kind of twofold here. One, watch these areas if you are looking for long ideas. If this market does hold in, if it bounces, these are the two groups that might be kind of acting the strongest if we do get some type of relief rally here, either temporary or more persistent. And those are certainly two areas I'm going to be watching. Bitcoin, kind of last but not least here, you can see really tried to get going on this breakout. So again, its range was a little bit different, I guess, than stocks in the sense of it was, really seeing that breakout on, this would be CPI day here, or right in front of it, actually. Bitcoin started to get this breakout, resolve this range to the upside. You can see it got all the way up to about 18.4. It faded, came all the way back down, and here we are again back into this range around 17,000, which has been pretty much a magnet here going into year end. So not a whole lot of change there. Bitcoin's still in a pretty tough downtrend, but it's got a terrible news catalyst and everything hitting it every single day, and it's hanging in there. It's not making new lows. So there's some, again, I guess, relative strength you could sort of glean from that. So that's kind of it. That's what I had for today. There's obviously lots more to talk about, but at a high level, I'm going to be watching the dollar. I think that's going to be the most important thing going forward. We've got a kind of a fresh option cycle now on Monday, so we'll see how that goes. And again, it's a seasonally bullish time, which again clearly does not matter in today's session, given this breakdown. So everything, as we sort of always like to remind folks, like, know your time frame, manage risk. Those are the two most important things, right? If your time frame's longer, then you've got different perspectives here. If it's shorter term, then you're going to be, managing risk and looking at levels a little bit tighter. So of course, keep that in mind on what's good for you. But I think, going forward, 3,900, watching the dollar, two things that I think are the most important into year end. So hopefully this was helpful. Very short edition here of Stock Market Weekly Live. And I think that's it. I might not actually produce a video next Friday, given the holidays. I think I'm going to be doing some traveling on Friday. So happy holidays, everyone. And hope you have a good couple of days off and enjoy the year end. And if I don't talk to you, I'll see you back here in 2023. Thanks so much for tuning in.